Greetings and good day, I hope you're doing great. I'm with you for the daily analysis of the USD JPY currency pair on April 8th. Last week we saw that after this pair reached the 160 yen price range, it showed rejection to this level and immediately pulled back down. Ultimately, last week's candle closed around 159.6 yen.
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
A 2-week ceasefire for the Middle East war, we witnessed a rapid weakening of the dollar, and the price of this pair also decreased. Looking at the economic calendar, we can see that we won't have any impactful economic reports for the Japanese yen this week. As for the dollar, later today we'll have the important FOMC meeting, and the most impactful news for this pair this week will be the CPI data for the US dollar on Friday. We're currently examining the currency strength chart on the weekly time frame. We can see that at the start of the week, the US dollar was trading with much more strength compared to the Japanese yen. But today we can see that after the reduction in Middle East tensions and the announcement of a temporary ceasefire, the US dollar has weakened and is now trading as the weakest currency in the market, while the Japanese yen has moved into a better position. By checking the dollar index chart, we can see that in the final hours of the last trading day, we witnessed a drop in this index. And then the dollar index started today's trading with a 0.5% decline. We're now looking at the 4-hour time frame. We can see that yesterday, as the price rose and reached the 160 yen range, it reacted to the 4-hour BPR zone and then retreated from this level. Now, with the powerful downward move that has occurred, we can see this liquidity gap, and this 4-hour BPR zone is drawn in this area. The price of this pair, which had dropped to 158 yen, bounced back up from this level, and we can see here that a Ryan soldier strategy has formed. However, given the dollar's weakness, entering a buy position in this area carries high risk, and we're trying to look more for sell positions during the price correction to internal liquidity zones. Now we're examining the 1-hour time frame. Since we expect the downward movement in this pair's price to continue as the dollar weakens, we can look for an opportunity to enter a sell position during this short-term correction in the current USD JPY movement. In the event that we witness a price correction reaching the 1-hour BPR zone, we can look to enter a short position within this area by utilizing various strategies. Wishing you success and high profits.
7 powerful volume trading indicators: footprint, volume profile, and fast scalp. Level up your trading.